Ladies and gentlemen, Greg Michalowski from ForexLive.com. I'm going to take a deep dive into the dollar versus Canada from a technical perspective in this Forex quick look. So let's get started. All right, let's take a look at the daily chart to start off with. And you see this yellow area right here. This yellow area is home to a number of different swing lows and swing highs going back in time. Most of these were highs here. We broke above it, and then we started to use this level as, again, swing highs through here. Here. I don't know if there's any swing lows actually, but the price, you can see all the different times that the price came into this area going back to September 2022, October, November, then in this year, February, March of this year. And in the month of October, the price extended above that area and tried to reach new highs going back to this point right here in October 2022, but fell well short of that and then rotated to the downside and started to use this level again as resistance. That pushed the price down sharply, but over the last 3 trading days, we've seen it run back to the upside. Why? Well, oil prices have been moving sharply to the downside. We, I think, moved below the 75-ish type level yesterday. We are higher in trading here today in oil, and that may be leading to a down type day in trading here today. But the high price that we saw on yesterday and again today came into the low of this swing area and found willing sellers against that level. So from this daily chart, this swatch of swing levels is real, and the fact that the price moved into it and found willing sellers against it in trading yesterday and again today, give the sellers some hope for the downside, and we are trading down in trading here today. Again, oil prices are a little bit higher in trading here today. Now, take a look at the hourly chart, drilling down into that. This is the rise to the upside, helped by, again, the oil prices. And the high price that we saw in trading yesterday, it stalled at a target area that I was looking for as a next target on the top side above the 200-hour moving average, and that was this 1.3813 level. That level corresponded with these lows right here. You can see all these different lows through here on those hourly bars, and then we traded above and below it here with a little bit of a move above it before rotating to the downside and moving sharply to our low price that we saw in trading. That's on Monday's trading. The rise yesterday came right up to that swing area and found willing sellers against it. So the sellers came in tilting the bias more to the downside. So and in trading here today, look at the 200-hour moving average. We came down to it, found support, came down to it, found support, came down to it, found support, came down to it, found support. Now has broken below it and moved down to the 50% midpoint of the move down from last week's high to this week's low. That level comes in at 13763. So what now? Well, this 200-hour moving average is going to be our key barometer in the short term, or should be our key barometer in the short term. Stay below it, and the sellers can keep the pressure on or keep control in the short term from a technical perspective. Move above it, and this break to the downside is a disappointment. Okay. Now on the downside, there is still work to do. We need to get below the 50% retracement at the 1.3763 level. If we get and stay below that level, we'd have traders looking toward the 100-hour moving average, toward this swing area on the hourly chart between 137.35 and 137.43. 100-hour moving average is just below that level, which is also equivalent to the 38.2% retracement of 137.31. So this area right through here is going to be a key target level on the downside on further selling pressure in the dollar versus Canada. So be aware and be prepared. So there's a deep dive into the dollar versus Canada from a technical perspective. Hope it gets you up to date and you're ready to go. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.